Welcome back to another episode of Freeform AI. My name is Michael Burke. I do data engineering and machine learning at Databricks. I'm joined by my co-host. His name is
Ben Wilson. I build in-product demos for MLflow at Databricks.
Today we're speaking with Adam. Adam first studied finance and then later went back to school getting a master's in cybersecurity and information assurance, and then a doctor of computer science. Professionally, he founded several companies and then joined several financial firms as a software engineer. And currently, he serves as a senior engineering manager at Coinbase and a financial advisor at Fireweed Capital. So, Adam, kicking it off, it always boggles my mind the scale that financial firms operate on. You've worked in a variety of financial firms on a variety of teams throughout your career. And do you remember a moment of inflection where you realized that finance just operates on a different scale?
Yeah. So I will say that in finance, you throw around numbers like millions and billions, like you're saying it's something like, a dollar or $2, right? Like, yeah, we're going to pay, somewhere between 25 to 30 million for this, right? Like, yeah, it's just $5 million, right? So where it actually started for me was back in my undergrad. So I got my bachelor's in finance, and at the time, like all good college students, I had about $20 to my name, and lunch was $7. $8 you got the cheeseburger instead of the hamburger. So
A
I'm sitting
dollar
there
for
like,
cheese? Are you
oh
kidding
yeah,
me?
yep, it was a dollar. Well, it was a dollar extra for cheese. Yeah, that was literally like I remember days when I could only afford the hamburger, not the cheeseburger. And I was like, one of these days, I'm going to be able to afford a cheeseburger every day. And now here I am. I can afford a cheeseburger. But yeah, so in finance, even back in school, you start looking at like corporate profit and loss statements, right? And everything is like 1M, 2M, 5M, right? And so like you're just dealing with millions to begin with. And then really what starts to really boggle your mind is when you get into like wealth management, the size of some of these firms, right? When you look at stuff like BlackRock, you're in the trillions of dollars, right? And we're past billions at that point, right? We're into trillions, and it's like 1 or 2 or 3 trillion, but that's still a lot of money. And so you kind of just you end up so almost bifurcating your brain a little bit, right? Where like as a human being, $100 is a lot, $200 is a lot, right? Like that the difference between those two numbers is sizable. And in finance, you almost take the same view, but you just add a million behind it, right? So like the difference between like 2 million and 3 million, it's a unit of one, like 1 million. But you kind of think about it the same way that you would like a unit of one difference in your personal finance.
Yeah. And what about on the infrastructure side? I forget the exact stat, but like JPMC moves $1 trillion a day type of statistic. It's just ridiculous. And the amount of individual transactions is ludicrous. So have you seen scale like that either at Coinbase or prior?
Yes, certainly I've seen scale like that at Coinbase. When you look at trading engines, really you are someone when you're doing billions. As a trading engine, you're doing billions of dollars in trades over a period of time. Coinbase is right up there. And again, you kind of look at these things where when you look at it from a data perspective, $10 versus $1 million versus $10 million, it's just zeros, right? And so like when you think about the actual string format, right, like the string format to move $100 million is identical to the string format to move $10 million. And I actually remember one of the startups that I joined, I was responsible for doing the token distribution. We did an ICO back in 2017, and I was responsible for token distribution. And I had the Python script, and I was going through sending out tokens to our some of our investors that invested not through our ICO. And so there's this one dude, I was like going to go give him $10 million worth of tokens, right? And like right before I hit enter, I was like looking at my thing and I was like, wait, count the number of zeros. Oh, whoops. Like I missed a zero. I was going to give him a million instead of 10 million, right? So like add a zero, run the script. And like just like that, that's $9 million in value, right? But it was just like, it was the craziest thing, right? Because part of your brain is going, oh gosh, I hope I got the indents right in this Python script. And the other part of your brain is like, oh, I just added a zero, whatever.
Yeah,
Right?
that's freaking insane. Yeah.
That really reminds me of classes that I took years and years ago in astronomy. And I heard the same thing from astronomy professors. They're like, you have to divorce your concept of distance and size and mass because the numbers that we're dealing with are beyond the ability for our brain to actually reason through it. And there was this clip that a professor that I was taking a class, and she was like one of the lead researchers at the Keck Observatory in Hawaii. And she had this cool video that they built about showing scale and like, and how everything that you ever see in like Hollywood or on documentaries, anything that you see about the scale of just our solar system is always compressed to make it understandable, like distance of planets between each other. But she had this video that she sped up that showed like basically traveling to Neptune. And after like 15 minutes, we're like, dude, we're not even at Jupiter. She's like, don't worry, we'll get there in about 15 hours at this speed. And we're like, holy crap. There's just like nothing going on, just like stars slowly moving. We're like, okay. So distance to the nearest star, she's like, oh yeah, we'll be here for a couple years. I'm like, got it.
Yeah, that
But
just
yeah,
puts it in a whole new perspective, right?
yeah, and that reminds me of like finance as well. Like, I think you have to shift your understanding of what money is as a valuation when you get over certain thresholds. So I felt the same thing when I was younger. It's like, oh man, I got like $40,000 this year. It's like, whoa, I'm making so much money than last time. And then at a certain point, you're like, okay, I made in 3 weeks what I used to make in a year. You know, when I was first starting, it's like money is very weird when you start thinking about what the value of it is. I can't even imagine 100 billion, like what somebody messing with that money has to conceptualize in their head. How many aircraft carriers can I buy with this?
Exactly. Yeah. And the thing you don't want to ever do in finance, and I'll spoil it a little bit here, you never want to look at the earning power of a individual human over their lifetime. Because suddenly you realize that, like, on average, right, like, it's $50 to $100,000 a year that someone's going to earn, and they're going to work for 20 to 30 years. When you start moving $1 billion, you know how many human lives that is? Right?
Yeah, it's insane.
It's really scary at that point, right? Because you're like, oh, I'm gonna mess up a zero, and it's like, oh, just 10,000 people, right? Like that's a sizable neighborhood. Their entire life value,
Mm-hmm.
right? Yeah. So
Yeah, how
like,
do you
yeah, you don't want to start thinking like that, right? Because pretty soon you're like, oh my gosh, I'm moving a state's lifetime's worth of value right now.
Or entire countries like GDP.
hmm Yeah.
Yeah, how has that impacted your view of money? Like it's kind of hard to fathom like looking at a transaction on a screen that's $1 billion, at least in my head. I'm sure like other people see that every single day, but to me that's a lot of money. So like has that changed how you view, and without getting too political, like has that changed how you view like the value of money and also how you advise your clients?
hmm it has, right? Money really serves a number of purposes, right? There's the store of value, right, which is like the concept of gold, a unit of account, which is, where money is used as a currency on your profit and loss, and then as a medium of doing transactions, right? And so that's what we think about when money comes to, like buying gas or something like that. At a certain point, money takes on a fourth aspect, and that's I guess I call it like raw power. So when you look at somebody who's making $50,000 a year, right, they are using money as a way to transact, as a way to store their value, and to some extent as a way to recognize their net worth. When you look at someone making $50 million a year, right, there is a fourth dimension to that money, which is they can turn around and drop $20 million on whatever they feel like, right? They could decide, I like that building, I'm going to buy it. They could decide, I'm going to fund that company over the hurdle of, like the valley of death type of thing. Or you look at somebody who's now making, 100, 200, $500 million a year, right? And at this point, you start getting into the incredibly wealthy individuals or institutions, right? And at that point, well, $500 million a year in money coming in, that's just raw power, right? You can decide to do things that normal humans can't, right? Like I'm going to go buy this section of a country, right? Or I'm going to go change this government and it's not necessarily through military force, but like $500 million, right? You can break off 20 million bucks and go lobby the government for stuff. And like, there's just a raw power sense of money. And as individuals, I think we end up right around $3 to $5 million in net worth. Individually, you start to recognize that sense of power yourself on a local scale, right? We actually saw this in, gosh, where was it, Washington. Someone tried to buy their way through an election, and it turned out very poorly. But you can do stuff like that, right? You can decide on a local scale with enough millions of dollars to your name that you're going to change something, right? And you have that level of power. And so that's really where, as I advise my clients and other software engineers who have been through IPO events or who are high earners who are looking at potentially doing like a fire or a coast fire style, you have to start looking at that fourth aspect of money and saying there's real power here. What do I want to do, right?
Question for both of you: how do you think about enough being enough?
Oh,
Personally,
I already have a canned response for that.
Let's hear it.
For me, it's freedom. It's like money, like the goal for me, and it has been since I was probably in my mid 30s, is realizing what capital can do, not for things that I want to acquire. Because I actually don't like acquiring tons of stuff, and I don't have expensive tastes by decision, like conscious decision. So it's more of, can you remove yourself from the forced effect of having to do things for other people and just do things not selfishly for yourself, but things that freeing up like true agency would give for you. That's like, it's like my dream is like complete and total agency. And I think with enough money, you can have that.
And do you think you need money to achieve that? Or are there like intersections where you can do what you want and do it cheaply?
I mean, everybody has to pay taxes. Everybody has to like eat and live in a modern society. I think money is a requirement, unless you're somebody who is, before, like right when I dialed into the podcast, you guys were talking about going camping in cabins and stuff in Canada. Like, you could definitely do that. You could buy some, or like lease some land with a small amount of money up in Yukon. If you really like sled dogs and snow, you could build your own cabin up there and live off the land as like a self-sustaining, growing your own food in the summer and storing it and stuff. You could do that with no money or very, very little money. That doesn't interest me. So living in modern society, I think you need money.
Mm. Yeah, that comes back to the idea of store of value and a way of transacting, right? Money is the thing that in a modern society allows you to get what you want without having exactly what the other person wants, right? And so you have to have money to be the lubrication in your transactions, right? Like you just have to have enough. And then again, the store of value, right? Where you are consuming things and you need someone to do something for you, they are providing value to you, and so you have to have your own value stored in a way that matters to them, right? And most people are not going to take a chicken for their work, right? Like they will take a chicken breast maybe, right? But they're going to get that through the grocery store, right? And the grocery store is going to want money because the grocery store doesn't want you to do work for them, right? And so like you get into this very philosophical thing very quickly, but I think there is a level of enough, and I think it depends on how much money you spend. And what I look for, especially the folks who are looking at like FIRE, and that's financial independent, retire early. For those who don't know, and basically the idea behind this is I've hit enough where my assets that I own are producing or growing enough that I can take money out and I will never run out of money and I can support my lifestyle. So this is really easy to do if you're going to live off of $1,000 a month, right? You don't need that much money for $1,000 a month after taxes. And it scales basically as a multiple, right? When you start looking at, well, I need $10,000 a month after taxes or $100,000 a month after taxes. Now, what gets interesting about enough is there's a point at which the amount of money you have is kicking off enough money safely that you can do whatever you want and still support your lifestyle. And the interesting thing about money is 10% growth happens to anyone, or I should say 10% growth happens to everyone. But my 10% growth may be on $10 million, and your 10% growth may be on $10. You've earned $1. I've earned 1 million. And that is a very different lifestyle, right? At $1 million, I can live off 100,000, put 900,000 back in, and 10% growth next year, right? Gets me, what would that be? Almost 11, so 1.1 million. And now I've got an extra $100,000, whereas your growth gets you an extra 10 cents, right? And so when you start thinking about enough, the number that's enough for most people is in the millions, because you need, usually, depending on your cost of living, somewhere between $5,000 to $10,000 a month after taxes. And for some people in San Francisco, it's more. New York, it's more, right?
And you think that 10% number is accurate, including things like recessions? Like what is the withdrawal rate on that principle?
Oh, the law of averages is a horrible thing to use in finance. It's great for examples like this. It's horrible when you're actually planning on retiring or getting out of the workforce. Historically, we've seen the stock market return 7 to 10% a year on average over the long period of time. And historically, we've seen bonds return about 4% per year. It's a risk-free rate. These are rough numbers that were taught to me in my degree in finance. The problem with averages is the market can stay irrational longer than you can stay solvent. And what that means is just when you're ready to retire, because 10% on average works in your favor and you have enough, the market will drop 5%. The next year, the market will drop 20%. And the next year, the market will drop 10%. And all of a sudden, your enough is now woefully inadequate because you're taking out assuming 10% growth. And that's what we call sequence of return, basically the sequence of return risk. And that's one of the things that frankly, I look for my clients is like, hey, cool, you hit your number. Great. Now let's build in a lot more cushion, because almost without fail, Murphy's Law takes over. In your first year, the market's going to be down. Everyone's going to be hit, but it's going to be way more personal for you. So, yeah, again, averages are just horrible things to use when you're planning the future.
So what's the actual withdrawal rate that you recommend to build in that buffer? Not 10%, maybe like 8%?
No. Way lower.
1%?
I know what mine is.
Yeah. So amongst the fire community, they usually use something like 4%. And there is what's called the safe withdrawal rate, which is basically 4% of your money. And what people don't realize is that 4% safe withdrawal rate is actually over 30 years. So it's a fixed time period. And it gives you a high probability of not running out of money, but not 100%. So if you are 30 and you went through an IPO and you are sitting on $4 million and you're saying my 4% safe withdrawal rate will last me until I'm 100, no, it will not. It'll last you until you're about 60, and then there's a chance you have no more money. Right. And so unless you're planning on dying at 60, which, by the way, if you're a millionaire at 30, you're probably not dying at 60, you're probably dying at 90. You're going to be out of money for the last 30 years of your life, which is a little bit of time and probably something you should figure out.
Ben, what's your number?
I already have it calculated at 2.5% at 23.7 million, which allows for everything that Dr. Link was just saying. Based on the projections, I built like some Bayesian models to like project it out of like absolute worst case scenario is that it would, if the market was like truly tanking for like a decade straight, would still, based on diversification, not just in an index fund, but allow for a cushion of emergency reserve in order to build back up to target levels. So I gamed it all out over a period of months and talked to a couple of financial people, and they're like, this is highly conservative. I'm like, I don't need to buy a yacht. Like I might have like a couple of fun little purchases a year, like maybe a new guitar, or I need to replace my gaming PC. But other than that, it's like pretty frugal lifestyle with just drawing down. but having it just over a long time horizon, basically double in value, if not more. I don't know. Now I want to hear Dr. Ling's take on my theory of like,
Yeah.
am I looking at this right?
Yeah. So without kind of really digging into your philosophy on risk, and your philosophy on running out of money, and a lot of this is usually informed by what's happened to you in life as well, right? So there's a whole psychological side of money here that I really do try to bring into my practice because it helps me understand the whole person, right? At the end of the day, I'm more risky than many people. I've done startups, and so I have a risk tolerance that I know, but I also don't view all my clients the same because I know people are less risky. So 2.5% at 20 something million dollars, yeah, that's conservative. And it's also going to speak to some of your listeners who are making $80,000 a year coming out of college and going, okay, I cannot make $80,000 a year for the rest of my life and get $20 million. The math just doesn't work. And there are ways of being more aggressive. There are ways of taking more risk, right? There are ways that we can look at the numbers and the wealth that people have and say, how close can we get to what you want to do with this, right? And if you're making $80,000 a year and you want to end up with $20 million by the time you retire, we're going to have to take a lot of risk, right? Just mathematically. We're not buying lottery tickets, but it's there's going to be a lot of risk to get to that point. It's a life-changing sum on $80,000 a year. So my number is not nearly that high. It's not 20. It's closer to 10, closer to 10 million, right? But I think that also gets back to what we were talking about earlier about just scale. $10 million is a lot of money for one family. $20 million is a lot of money for one family. But these are the numbers you have to sit there with. To your point, Ben, you talk to some financial advisors. That's great. Some people want to manage their own money. That's great. Do you trust yourself looking at $10 million when the market is down 20% and you're down $2 million? If the answer is yes, great, do your thing. If the answer is no, please come talk to a financial advisor.
Yeah.
Right? Because my gosh, those numbers get big and you will be down with $10 million. You will be down 20% at one point in your life. And if you can look at a $2 million loss and say, I'm going to hold on for a few years, great. If you can't, I will look at your $2 million loss and I will tell you, you can hold on for a few years. And I'll be there to take the call when you're freaking out, right? But I mean, that's the reality is if you want that independence, if you want to have enough, that's what enough looks like.
Yeah, before we transition a bit into engineering, I'm curious, are there any like quick hitters, common tips, tricks? Like, what are things you see people do that you wish they potentially didn't? Or what are some like pieces of advice that you're commonly repeating?
Mm-hmm. The number one thing that kills engineers, especially, because engineers are smart. And then I'm going to use your example here because I love it, because this is what engineers do, right? Engineers have the ability to program things and they use words like Bayesian models. Normal human beings who are not engineers don't do that. And this is why I love being an engineer, right? Because you can start to figure out really complex numbers and complex systems. So what do engineers optimize for? They optimize for the fact that they're going to pay the lowest possible fee. And that's great, assuming you can do one other thing well, and that is stick to the course that you've charted. If you're the type of engineer who's going to optimize for a broad index fund and be conservative, and the minute you're down 20%, because that happens frequently, and you look at a $10 million portfolio that is now $8 million and you have $2 million in losses, if there is any chance you are about to sell, all of your optimizations do not matter because you are about to take the single biggest hit of your life. And let me tell you, on a $10 million portfolio, I will never get $2 million in fees. So your one mistake of selling on a $2 million loss, you could have hired a financial advisor for pretty much your entire life and never paid out that amount of money. So there you go. That's the single biggest mistake I see engineers make.
Overconfidence and thinking they can beat the market, basically.
It's not overconfidence in beating the market. It's overconfidence.
Panicking?
Yeah, exactly. It's overconfidence in your own reaction. It's forgetting that you're human, and when the market's down 20% and you sell and you lock in those losses, that is the single biggest mistake you'll make in your life. And a financial advisor can usually talk you out of that. And at least is a disinterested third party looking at your money and saying, I know it hurts, but stick to the course. Here's what we said. Here's what we're doing. This is all part of a plan.
Yeah, I could not agree more emphatically with what you just said, particularly with the disinterested third party. Even if they're getting a percent commission of what you're doing, I actually think stuff like that is good because it's some skin in the game. It's like, hey, if we go up, you get paid more. Like, great. But you're doing all this hard work, but also the core thing that my wife and I discussed about why we need like an accountant and, a financial advisor is basically that it's not like, oh, they're so much smarter than us about doing all this stuff. We discussed, we're like, they're not emotionally invested in this. So having that clear perspective is worth its weight in gold.
Yeah, that makes a ton of sense. Okay, cool. Adam, it seems like you like talking about this. Why are you still in
Yeah.
engineering? Or do you eventually want to move over to this as your full-time job? Where's your head at?
Yeah. I will end up doing wealth management full time. That is kind of my plan. Just because, the passion you're seeing here, honestly, I've been doing this well before I became a licensed financial advisor. I was doing stuff like this for engineers as a manager. I was doing stuff like this as a fellow engineer, just like talking to people and being like, yeah, the market's down, but like, here's your plan. Right? And in the US, in order to give personal financial advice, you have to be licensed. And once you're licensed, you can get paid. And so I thought, well, I like doing this. There's a whole profession and industry out there. And being an engineer, like I use words like grok, and my clients understand what I'm saying. And I understand words like Bayesian model, which most financial advisors are going to look at that and say, "Oh dear Lord, how am I ever going to sell you something?" And for me, it's like, "Yeah, like let's get into this, man. You want to do more modeling? Awesome, show me your code." Because it's a passion, right? I'm still an engineer, and I use a lot of AI and a lot of engineering in my own practice. I do still write code, but I mean, I love the finance side. That's how, that's how I get to create.
Yeah, and as a manager, you're still day-to-day contributing PRs?
hmm Yep. Yep. I am still day-to-day contributing PRs. A lot of what I do these days now as a engineering manager is much more around career coaching, around guidance, around, helping unblock engineers. So it's more the human side of stuff. And then again, that dovetails in with, as an engineer, I love to create. And so I get to create people's careers. And that's where I get my excitement for creation. But AI actually is the reason why I do still write code. Because I vibe code a lot. I vibe code a lot. As a manager, you get 10 minutes and I don't I don't get the deep focus time anymore to sit down and actually write and create. Um, and I don't know how many engineers still do, but I get a chance to at least sling some code out.
Yeah, I think it's transformed in the past 6 months. Ben, do you mind giving us the latest on how Databricks Eng is using vibe coding?
Like we do, like what most people assume when they use the term vibe code is exactly what you said, Dr. Link, is like, hey, I am time boxed here. I've only got 15 minutes to file a PR. I'm gonna give basically my product design, restrictions to Claude Code or Cursor or whatever, and say, go build this thing that solves this thing really quickly. You spend 30 seconds looking at it, ask it to make a couple of quick changes, file the PR. I think we do that level with every project. Like a lot of the stuff that we're doing as senior ICs is not like the quick fire, hey, this PR is like 100 lines of code or something. It's more like this project is like 27 PRs like stacked and it's 150,000 lines of code. We'll do the vibe coding over like a day period to get a prototype, just to have like, hey, it's the full stack feature. I need to see like, what does this look like in the UI so I can show people and they can play around with it. The code has probably got some problems with it, but then you go from that, and all of us do this. We'll take that prototype and start breaking it up into all of those individual PRs. Like, how do we logically do this so that it's reviewable and that we can grok what the heck is actually going on from the builder perspective? And then you're doing internal private you with an AI design review and code review before you even file a PR. So like right before this, I'm doing this with a project where I spent 3 hours this morning and probably blasted through 500,000 tokens. And it wasn't like, hey, fix this thing. It's like, hey, go build this functionality and then write the test for it and run the tests and then start the UI and write this like demo data into it. And then we're going to vibe back and forth, and I'm going to tell you how to fix everything. And after 3 hours, that PR is basically ready. So it's outsourcing something that we can't do very well as humans, which is typing on a keyboard. But we can look at code and design it, and then it's basically a typing assistant at that point that understands, provided you provide good guardrails to it, how to build for your software stack. So yeah, every engineer uses it every day, all day.
Yeah, it's been fascinating to see how my brain has shifted to be more guardrails focused and testing focused and design focused instead of like. Curious, do either of you guys have tips on, because I have shipped a bunch of just crap code recently for whatever reason. And a lot of it is because of vibe coding. I have this like illusion of, all right, this will probably work. Like, I'm super busy. I don't want to be doing this. Like, let me just like send it over the wall and hopefully it works. And then I miss logical errors, specifically in things like complex ETL pipelines that probably I shouldn't be missing. So do you have tips on building sort of an integration testing stack or like a logical framework that makes that shipped code more reliable?
So what I've done in my practice, and this is on the wealth management side, I am working on a AI assisted actively managed trading strategy. And so same thing, I've missed logic errors even looking at the code, right? And it's fairly complex. So what I've actually done is I've told AI to give me a daily summary of what it's doing, and I will copy paste that summary of itself back. So I use Cursor. I just literally copy paste it back into Cursor, and I'll say, explain what you did and what's wrong. And so I basically force the AI to look at the code and look at what's happening with its output and say, okay, well, this looks right. There was one time it was like, oh, I'm calculating the P&L wrong. Okay, let me look at that. And then it fixed it. And the next day it was still wrong. And I was like, what did you do? And it was like, oh, I have 3 different ways of calculating P&L. I was like, okay. So like then you take off the AI vibe coding hat, you put on the senior engineer hat again. You go, okay, so let's start refactoring how we do P&L. Pull the P&L calculations into a single place, right? And it's stuff like that, like where AI just doesn't get that. At least my version of Cursor didn't, right? And it was just like, you're still getting this wrong. You're updating the wrong spot. And then finally it's like, okay, you need to refactor. I'm a human. I've seen enough code. I know what you're doing wrong, right? So that's kind of how I've done some of that oversight.
Makes sense.
Yeah, exact same here. Like we could do an entire like podcast episode with just my like workflow that I use. And each of us on the team that I work on, we've learned things over like the last year and a half about how to like leverage these things the best way. And we've got into these modes of, it's increased complexity, but it's sort of forcing higher quality even with using these things. And something we realized like last month that was very interesting. Here's a pro tip for anybody. Have Claude Code. If Claude Code's your main jam for like generating code, and it is for most of us because we feel it's like pretty high quality. Copilot reviews everything internally. So you're actually putting these two different trained model systems against one another, and you almost put it into like a hostile, like make them hostile to one another. Kind of like how if you had an intern that was reporting to a principal engineer, and that principal engineer is super busy and it's just been doing this for 35 years. they're going to be ruthless in their comments. Not everything's going to be like a legitimate comment, but then simulating a Claude Code as that intern or that junior engineer, give them a chip on their shoulder when they're looking at code review feedback, so they challenge it, and you make them verify, like, hey, I have these comments that came from this other AI system, validate that they're correct, and then make a change if so, but don't trust everything at face value. And it's amazing how they antagonize one another basically with the comments. So I had one a couple of days ago where Claude Code actually said, tell Copilot that they're wrong about this and here's why. And I was like, this is hilarious. It's like I'm an intermediary of like AIs fighting against each other and having an argument. This is awesome. But then my point in that is exactly what you mentioned about the, like, hey, I'm telling it to refactor. I have to do that every day, a dozen times a day. Like, hey, code, like, those functions don't belong here. They belong in another place so that humans can read this and understand what's going on so we can reuse this code. It's like, oh, you're absolutely right. Let me do that. Like, thanks. And write a test for that, please.
Tests.
And then once you're like getting into that point where the code is architecturally sound and like best practices are being used, that might take a dozen iterations for me going back and forth. I then go into bug bash mode where I'm like, hey, I'm going to now write the code to hit these APIs and make sure that I'm checking for edge cases. And I always find something, like, every single time, and then feed that back and then say, like, hey, here's what I did for like testing this out, and here's the results. Go fix this, man, like, because this is a problem. And it's like, oh, didn't even think of that. Let me fix that real quick. And then you go back into okay, clean the code up. All right, now let's run all the test suites. So it's interesting to me that like how fast you can move once you have that solid workflow, but that's not the true vibe coding that I think a lot of people do, which is just like, I need this thing that does this thing. Go build it for me. And then it generates it and you're like, git add all ship. And then humans look at it in the PR and they're like, dude, what? Like, this is so bad. Who wrote this? And they're like, oh, Copilot did. Like, don't tag us on a PR if it's in this state, please.
Yeah. That's definitely very common, especially with junior engineers. I feel like even if they do review the code, they might not know what is good and bad. So at least for AI FDE, we've been trying to figure out how to enforce guardrails and basically upskill people so they know that architectures are good or bad. Adam, I'm curious, have you guys approached that at Coinbase at all? Is human in the loop review with someone senior always necessary? And if so, I feel like then any L6 plus person is just basically reviewing code all day. So how do you manage the time aspect and how do you ensure quality?
Yeah, so human in the loop is always necessary. That is, don't vibe code systems that move money. Those errors actually cost people money. And so, no, there's always a human in the loop, right? And you always want to take a look at the code that you're writing. But similar to what Ben was talking about, right? You don't just open up Cursor and say, hey, write me this new feature and ship it, right? Like, I feel like that's what we were doing as an industry maybe 9 months ago when AI first came out and everyone was like, hey, this thing can write code. Awesome. And really over the last, I'd say 6 months or so, I think a lot of engineers have gotten smarter where it's you are using 2 to 3 different systems in different capacities to look at things. Because otherwise, I had an AI prompt that I was working on, and I said, hey, can you write some unit tests for this? And it wrote some unit tests. I said, great, go run the unit test, tell me what the result is, and ran the unit tests, and one failed. And I was like, oh, well, that's not a valid unit test anymore. Actually, let's go ahead and take that out. And so we kept working, and then later in the day, it was like, oh, this unit test failed. Don't worry, that's an invalid unit test. I'm taking it out. I was like, whoa, 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 whoa. You don't get to make that call. I got to make that call. So it runs you like a junior engineer. Like, oh, well, the unit test failed, so I took the unit test out. Okay, your PR passes now, but that is not how we make PRs pass around here. And so that's where having that second model to, again, just kind of look at it and say, why did you take that unit test out? Well, it wasn't working. Have you considered that maybe you should make the unit test work before you take it out, right? Um, so I feel like that's where we're going as engineers now. And a lot of that, I don't know how we get more junior engineers to get that skill set, because that skill set of that unit test is invalid versus that unit test is still valid. And even thinking outside the box like that, like I feel like that is much more of a staff engineer thing where like I've just seen enough code, I've done enough of this that I know the answer is always I can change the rules of the game. But as a new engineer, like gosh, I wouldn't have been the person to do that, right? You work for 4 hours until that unit test works. And then your senior engineer comes over and your senior engineer goes, that unit test doesn't, it's invalid. Just take it out. Why did you waste half a day, right? So I think that's the challenge we're going to have as a profession, right? Is like, how do you get the new guys in to learn to get that level of knowledge? And a lot of that comes from taking down prod. That's how we all learned, right?
Shipping regressions. Yep. What
Yeah,
did I just
exactly.
break?
Yeah, yeah, and then debugging and troubleshooting under pressure, right? We all have our stories of the CEO or the director coming at you going, "Well, is this fixed yet?" And you're going, "No." Why'd you break it? Well, let me tell you what today's been, right? Like, yeah, 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 I know prod's down. Yeah, I know the company's down. Yeah, I know I did it, but just hold on, we're fixing it.
Yeah, that's interesting. Okay, so there's got to be a little bit of pain to get some gain. That makes sense. You mentioned you like coaching careers and building careers. Um, what are some things you think that junior engineers can be fast tracked to and they don't have to learn the hard way? And Ben, I'm also curious your take.
That's good. Um, I think you can be fast tracked through some of the algorithms, file setup, um, some of the high level architecture, right? I'll use an old example here, but like if you're developing like model view controller style stuff, right? Like I remember having debates around like should this be in the model view or the controller, and I think AI can take a lot of those philosophical debates and just settle it one way, right? Like there's like 9 different ways to do it, and they're all right depending on what engineer you're dealing with. So I think AI can just kind of take that and say, okay, look, here's the framework, right? Like I put this together, and it's good enough. So you don't get stuck on philosophy. I don't think you can fast track business logic, and I don't think you can fast track just, I'll say it again, taking down prod. I truly believe the school of hard knocks is the best way to learn some very important lessons as a software engineer. And if you don't have a story of I took down prod, like honestly, I'm scared of you as a software engineer because you don't know what it feels like, right? Once you touch that stove, you burned your hand, like you've taken down prod, awesome. Like welcome to the club. We've all done it, right? But if you've never felt that pain before, your risk tolerance may be a little bit too high because you don't get what you're about to break.
Yeah, I couldn't agree more. And that sinking feeling when you realize that you just dropped the table schema for even staging, and you thought it was like dev, and you just realize like, oh, I just brick staging for like every engineer, and like everybody just starts standing up in the office at the same time. And they're like, what the hell? And like, that was me. I'm restoring from backup. My bad. This is why we should have 2-person verification. But or like taking down prod, and you're like, dude, last data backup was 2 days ago. We're screwed. Like, how do we restore those orders? And somebody's like, go figure it out. Like, the data's in other databases. Go figure it out. Restore it. And you're like, oh no. Yeah. Yeah. The product aspect, I couldn't agree more. That's experience and just like sitting down with more senior people and observing how they do it. That's sort of on the job training. I don't think you can short circuit that. It's just like, how many projects have you been involved with? How many designs have you done to really understand, like, how does this company work? And like, what do I need? Like, what are the user journeys, whether internal or external? And then, yeah, and I also agree with the semantic stuff. That still to this day drives me nuts. Semantic arguments. Like, oh, well, this is not technically correct. Like, Yeah, but it works. And like I ran time it on 1,000 iterations. It's identical to this other one. Like, why do we need to rewrite this or refactor this? I don't care about your design pattern. This is easier to read. But yeah, so like a lot like bike shedding, that whole thing that happens, that drives me nuts. Different engineering cultures have different levels of that, but it always exists.
What is bike shedding?
It's I think the original explanation was uh, somebody's working on designing a nuclear reactor in Amsterdam, and they designed the entire plant, primary, secondary systems. They designed all of the support architecture for everything on this design. And everybody sits down for a review, and everybody's arguing about what color the bike shed should be painted. It's like, it's so irrelevant, so stupid. Like nobody cares. It's not the core thing that you're working on. The more senior you get, the more complex projects you work on, the more it tends to happen. And sometimes it comes from people's just wanting to contribute and wanting to show that, like, hey, I left comments on this PR. It's all bike shed comments though. Like, oh, I don't like, could we just like redo the doc string on this? Like, sure, I'll do that. It's immaterial to, like, you didn't review any of the code that's actually the core of this. Like, there's zero comments on that. Whenever you see stuff like that on PRs, it's like you might have built something that nobody wants to touch or they're not familiar with, but they need to feel like they're helping out in some way. So they leave what comments they can. Bike shed comments. Let's make it red. No, let's make it blue.
You find it a lot with more senior management as well. And the way I've heard the exact same thing, nuclear reactor. I've heard it explained as people don't understand nuclear physics, and so they can't comment on that. But everyone understands a bike shed and paint, right? So like everyone has an opinion. And so usually you'll see, like, if a director gets a hold of a PR, and I'm picking on directors here, but like, yeah, a director will be like, you should rename this variable. And you're like, that's so immaterial. It's irrelevant, right? Or like design docs, right? The higher up you go on a non-technical side, design doc comments are like, I disagree with this sentence. It should be rewritten. You're like, cool, but that doesn't involve anything technical with the system I'm designing.
Yep.
So, and if you're an engineer, by the way, and your manager starts bike shedding, hopefully you've got a fun, good manager. You can just call them out on it. I know I bike shedded a few times because I had to leave a comment. Um, and honestly, if you call out your manager on it, usually, hopefully they're good and they'll laugh it off because they get it. Like at a certain point, sorry, I've been divorced from the code long enough that I just don't understand what you're writing. Please be smarter than me technically, and let's go bring in a principal engineer, right? Like that's what you do as a manager. Um,
That makes sense. What else do you do when you're building careers?
yeah, a lot of what I do is focusing on opportunities for engineers and then helping them land the opportunity, right? So my sweet spot for coaching is usually around like going to senior engineer or going from senior to staff. I've gotten folks up to senior staff before, um, which is basically like right below like a principal engineer. Um, but I really enjoy folks who are trying to not necessarily get technical depth, but move beyond just technical abilities. And what you find as you go up in your career, even as a technical engineer, is you have to rely on what's called soft power a lot more. And this is something that I found engineers typically tend to struggle with. There's an old joke that how do you find the most extroverted engineer in a room? And the answer is they're looking at your shoes, not theirs. Yep. Like I said, this is why I work with engineers, right? Because I have all these jokes, man. They're not bad. They're just
That's a
inside
good one.
humor. Yeah. But it's really true, right? Like we get so trained in the technical side of our profession that at a certain point in time, you need three people to do the work that needs to be done in order to deliver on time. And now you have to get three people to like you enough to do the work that you want them to do because they're going to have to stay late and they're probably going to fix your bugs that you introduced in the first version. And that's a staff engineer, right? They don't report to you. You can't fire them. You got to make them like you and do some of the grunt work. that you don't have time to do because you're doing other more high value work for your skill set.
So how the hell do you do that?
Well, you talk to your manager because a lot of what managers do is this people skill stuff, right? And it's basically, how do you rally troops around a vision? How do you get folks excited to build what you're building? How do you show the value that you're going to build for the business, and also how it's complex technically? It's going to be a fun thing. Um, there's a lot of coaching that I do around that, and that's what I love doing, right? Because it's an area where a lot of engineers generally don't have inherent skills the same way that engineers have inherent skills around programming. You know, I would suck at coaching someone who knows Go to write Rust, right? Like, once you've written one language, you can kind of write them all. It just takes time. Whereas going orthogonally to people skills, right? Like that's where it's like, well, the engineer said this to your face, and what they really meant was, like they're not really a jerk. They're just also feeling at the edge of their knowledge, and they don't know what to do because they're scared that you're about to figure out that they don't know what you're asking them to do, right? And it's like, oh, they're not being mean. They're scared. It's like, yes, exactly. So go in and train them, right? Like, and that's the fun stuff, right? So that's a lot of the coaching that I do with people now.
That makes sense. Yeah, Ben, we've talked about this ad nauseum. And to me, it sounds like the way that at least you have approached it, and I'm starting to approach it, is they're all just problems to solve. They're all the exact same like logic framework, and you just use different mediums and different like interaction styles with like testing hypotheses. You basically try something, see if it works, gather data, come back, think, try something again, and then keep iterating until you get the result that you want. And then along that way, you've hopefully built up the skill that's required for whatever that task is. So, Adam, I'm curious, like, do you bring it down to that like very fundamental iterative level where it's the same components and same building blocks, or how do you enable someone who's highly technical to work in a new space?
I think of it as testing and prod. That's what humans are, right? Humans are testing and prod.
What
And
happens when you take down prod?
well, that's usually called a murder charge.
Sure.
So you don't want to take down prod to be human. I actually, my wife doesn't like me for this, but I refer to raising my children as a long running test and prod. I just won't figure out if the test worked for about 18 years, right? And there's really no backsies at that point. So whatever bugs you ship, they're
Yep.
just stuck in prod at that point. Um, but honestly, like it's kind of funny, but as an engineer, like you instantly understand what that means, right? If you think about interacting with humans as testing and prod, you can say, okay, well, obviously what I did there did not get the outcome I wanted. I must have done something wrong, or there must have been a bug or an error in the process. How can I find a different way of doing it? But you also know you're testing in prod, which brings in all the inherent risks of testing in prod that like you might mess up this relationship. And the answer might just be you don't work with that person well anymore, right? You've just kind of introduced the unresolvable bug into prod. And so what do you do at that point? And the answer is you go find a new production environment, um, right? Like sometimes I've got engineers that I don't gel with, and you do what you can while you work with them and learn what you can. And when you need something done, they're not the people you go to. And we've all got people like that, right? Like, nobody likes everyone. So sometimes that's just recognizing that, yeah, you just, for whatever reason, don't click with that person. So is there someone else in the team you can work with?
That makes sense to me. And that would relieve a lot of pressure for someone who really wants to make the interaction go well. Cool.
Yeah, not every patch fix is successful, or it can even be applied. There's some like fundamental bugs in systems sometimes that you're just like, yeah, it's kind of like a design flaw that was built in from the ground up, and I don't have time to refactor the entire code base.
Yep. And I feel like true maturity as more senior engineers develop is recognizing where your own fundamental flaws are,
Mm-hmm.
right? Like you come to me that, with this type of a document, or you come to me in this way, or you come to me at this particular time of the day, it ain't happening. There are some people you do not pitch before their coffee.
Makes sense. All right. Well, I think we're coming up on time.
Yeah.
It's always fun to end on a negative note, so I'll take this opportunity and summarize. So we talked about a bunch of different stuff. Really cool episode. On the finance side, the market can stay irrational longer than you can stay solvent. So be aware of that. And 4% is roughly the safe withdrawal rate for a 30-year time horizon. Also, it's really important to take the psychology of loss into account and be realistic how you would act when there's a major loss. On the coding and technical side, for AI-based coding assistants, take an adversarial prompting approach and put two AIs head to head. And just having that competing aspect will often lead to better results. Things you can fast track for junior engineers, algorithms and components, and these sort of low-level basic software engineering skills. But things you can't fast track are the pain of breaking stuff and also business logic. And finally, it's really important to learn soft power. Technical solutions are not always the best implementation. So, Adam, if people want to learn more about you or your services or anything else, where should they go?
Yes. So I love working with software engineers. I'm based in Minnesota, so I work with a lot of Minnesotans, a lot of Midwest software engineers. You can find me at fireweedcapital.com, or you can email me, adam@fireweedcapital.com. Let me know you're a software engineer too if you email me, because I will understand and I will talk to you as a software engineer, and that's a lot more fun for me. Look forward to hopefully hearing from folks. I really like helping.
All right. Well, until next time, it's been Michael Burke and my co-host.
Wilson.
And have a good day, everyone.
We'll catch you next time.